Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday, the 15th of August, 2022. I apologize for not being able physically to do the updates over the weekend, the free ones. For my paid subscribers, they got everything that I could. I was at the doctor's on Friday. They looked at how my operation is going. I had burst stitches. They said it's normal. People do that. It will heal really a lot this coming week. That's 3 weeks after the operation. Well, 2 weeks after now, in my third week. I'm talking, I think you'd say, pretty normal. But there's stress on the area that was operated on, so I got to take it easy. Okay. They also told me by next week, plan whatever I'm going to do. So I'm already planning for September, the live webinars. I want to do special reports later this week. I'm going to pick a market and do my first one in quite a while. Now, we're going to talk today about moving averages as we get onto some of these charts. I, in my metal update, pointed out something. If I were to take 15 what I consider good traders and show them the fundamentals that have been coming out the past day, today, and I showed you China not meeting anywhere near the growth that they want, missing it by everything to the point where they even cut interest rates because of how bad it is. Showed you the New York Fed number, how terrible it is. Showed you housing numbers, how terrible they are. Would you think the stock market would rally through all this and keep going even today? I would say that to a man, most would say no. But that's what charts are all about. The charts in this are still at this point interesting as heck, interesting time. So let's go to them and see what's going on. First, we're over the 18-week average, so the bias of the market is up. Let me explain something. I believe that you have to have something somewhere that tells you should you have an upside bias or a downside. The second step is you have to have filters on different pieces of work that you do and a hierarchy to the work. First thing I look at is what's the chart look like? I'm not blind, it's an uptrend. I think you'd agree with it. And amazingly, it began in June. With all this bad news, this is what's going on. The second thing is you've got a pretty consistent pattern of higher lows, higher highs, bullish. Number three, and this is where we get. I believe that after you've been away from the 200-day average for a while, getting up to it and trying to challenge through it and stay above it, fool's play. I want to stick my neck out. You're in a zone where the market's going to get a correction. I don't know how deep. Can't tell you more than that. I'll stick my neck out. I am not willing for you to go short, but I am willing to tell you I wouldn't be long anything beyond it. My own personal portfolio, I don't want to own anything beyond this, except Twitter. I have throwaway money I put in it. I think Musk is caught. Even today, a judge said you get to have one person testify on the bot. He's the head of the Commerce Department. That's good enough for me. And that's going to be it. I have seen this play. He wants Twitter. I really believe what I'm saying. I certainly don't know him, can't prove it. I believe he wants it. LVMH, I don't want Tiffany, I don't want Tiffany, I don't want Tiffany. They got a few bucks off, they got Tiffany. Not a bad move for the long term. I think Musk could be very good for Twitter, long term. But in any case, in looking at the market, I think you're going to get resistance right there. And my gosh, the Bollinger Band. What do I teach in the Bollinger Band? Whether you're embedded or not, the first challenge of a Bollinger Band and that number is stiff resistance. That's all I care about. As I come to the next chart, okay, I've got the embedded reading, bullish as can be. The market keeps making the higher highs, doesn't even let me in the way that I'd want to come in. And I'm going to look at this zone. This 14,050, 13,923, and I want to stick my neck out. I love doing it. I get it chopped off anyways. As I told you, I'm the original Swiss cheese person from doing things wrong. I might as well make a call. I think the first challenge of the 200-day moving average of closes in short order will produce a trade top. Same thing in the Dow. Embedded, I realize it, you're over it, I don't care. That's what it typically does, and I'm going to say the same for the Russell. Now, If you run away big, then that becomes support, and I'm obviously not right away. It can take a little time, but I think I'll be right in the end. We then come over to the VIX, and the VIX is trying to get up to the 18-day average. It's gotten a bearish embedded reading. A trigger that something has changed would be for the VIX to get the red line to close over 21, or to lose the embedded reading in the stock indices. I am not telling you to go short stock indices. Don't write me and say, oh, Ira said I should go short, look where the market's at. I just don't want to play anymore once those numbers are hit. Are you understanding what I'm saying? After a big rally since June, making all this up, getting up to that number you haven't hit for a while, I think the percentages are with me. Then we get to the bond market, which is void of a trend. You've got a higher high, a lower low. That's not a trading scenario. The 10-year note, you've got the same type of thing. A higher high, a lower low, oversold. I don't know what to do with those markets. The SEP dollar index came down, found its support right where it typically does. The Bollinger Band bouncing away from it. Okay, not a trend. In the euro, you fell enough now that you're under this low, I believe, right through there. You probably have a higher high, lower low, as we're doing the show. It wouldn't surprise me. I really thought you're just caught right here. I think you're caught in narrow Bollinger Bands in a lot of the currencies, and they're not going one way or the other. The British pound, not too far away from that, no trend at this point. It's what I'm seeing in the markets left and right. By the way, I want to come back to the pound if I could. What happened the first time you hit a Bollinger Band? Bang. What happened the first time? You went through it for 3 days and then go. You can get delayed reactions. You got to understand that when you hit these numbers and you're not embedded, things occur. That enhanced Bollinger Band course teaches you this, the different stages that they're in. Bitcoin, got up over 25,000 for the first time in a very long period of time since the break actually began down here. Now, I don't like what I'm seeing on the chart. What do you think I'm seeing? If I were to have you in a chart room with me, hey, John, can you raise your hand over there? Billy? You don't see the sideways action of the Bollinger Bands? Caught in that spinning mode right now. And it's even tightened it up more between the 18-day average and that. You generally don't go anywhere. You spin your wheels, you lose money, you think you're going to follow through. It doesn't. You get nervous when you should stay in or out. It's a very difficult scenario. Crude oil. Well, I'm confused. Is the Biden administration going to make a deal with Iran if Iran says the Revolutionary Guard is not a terrorist and they're taken off the list? If so, why is he even thinking of running for president? That is not going to sit well with the American public or any of our allies. Now, I said any. That was a lie. Do you think Europe, the European Union, cares if we take the Revolutionary Guard off when they need the oil out of Iran? I think they want to get that oil any way they can. But here's what they don't get. They've been getting it in a roundabout way. Everybody's letting Iran cheat with the oil anyways in this environment. How much more do you think they can really put out on the market? It could be 1 million barrels a day. It could be, but I doubt it to start with. Number two, if they say the Revolutionary Guard comes off the list and that's a condition, there'll be no nuclear treaty. That's what I predict. We'll see if I'm right or wrong. When we come to crude, we keep coming down to this Bollinger Band looking for support. You're oversold, you're into the support, you're not trending. I'd be very careful down here. Same in WTI. I don't see anything you do. Then we get to the rebob gasoline. You have lower highs, lower lows, but it's not breaking the way that it could. Why? Oh, I forgot Labor Day is coming. And now the gas stations can goose you again, because this is their last big time to get you before they can't get you anymore because the driving season really starts coming to an end. Don't write me if you're a service station owner. I know the game. You know the game. You didn't drop prices like mad after July 4th. It took a while. I kept telling you what was going on in the futures, and I looked at the wholesale. I had people write me, explain to me the time frame, the 59 cents. Okay? But that's why I think you're not dropping with what the futures are doing. The futures don't look good here. The demand is slipping away. The big buyer, I don't care about Iran, is China. And then if they don't buy all that Russian oil, it's got to go to India, the next country with money. What if they don't buy it? Well, it's sanctioned oil. Unless all of us that put sanctions on Russia cheat, that oil's really got a very difficult place to find home. Maybe Africa or somewhere can be found. I don't know. But it's not going to be easy. It'll be more expensive because of the shipping, how far it has to go, so on and so forth. But the threat that there'll be an Iranian deal, all this other stuff has been weighing on the market, and understand that that's normal. It's still a relatively high price. Nat gas. Will nat gas be able to break out of this sideways action? That's what you're dealing with. Sideways action is real hard to do something with one way or the other. Be careful with it. Overbought. You're going to be in California, 109 degrees in different areas tomorrow. There's a heat wave building there. The question is, does it make it through the center of the country or stuck there? That's what we all have to be watching. We'll take it the way it can. It comes to us. Is that fair enough? Now, for those of you newer to the futures markets, let's talk for a minute about what we have. I have a kit for you. Charting software, different brochures that come in this, chapters galore to get you started. Our mobile application, yeah, the mobile app is phenomenal that we have. All my research goes in there too. You're going to get cause and effect sheets. Cause and effect, by the way, I wrote 35 years ago when Volcker was around, maybe 40. And people didn't understand M1, M2, and M3, so I made it my business. I remember sitting in the Chicago Mercantile Library and putting a paper together. You know, those were the days before the internet, and I created this, I put it on my TV shows, and we'd get 1,500 calls in on a Wednesday, send me this, send me that, and I would do it, obviously, because people didn't have a way to get all this information. Now I can do it with you through the internet. It's all part of the kit. To get everything we've got, just follow me. Take your cursor to the top up here, give a click, and away you go. You can also go to the website under free offers, and that'll take care of it. Let's see how I do with these 200-day averages. I'm Ira Epstein. You have a great day.